Hi everyone, this is Mrs. V Chen. Welcome to my Form 4 Accounting lesson number 20. Today is 26th of May 2020. Alright, so we will do one past exam question in 2002, which is about correction of errors. Okay, so here we have the question. Okay, so in 2002, and then we will do part B today. Okay, so before we look at the question, let's look at the things that we have to prepare. So part A, we need to prepare journal entries to correct the errors, and then after that we draw a suspense account, and also we need to adjust the net profits in the income statement. Okay, so here we have answer for double entries. Don't forget to put this debit column, credit column, $sign and $sign, otherwise marks will be deducted. Okay, and on this page I have my suspense accounts. And then part C, so we always start with this heading saying that statement showing the adjusted net profit for the year end, and then we start with the net profit before adjustments. This is the description, and then we add things later on, and then we need to minus something from net profit, and finally so we get this adjusted net profit, and this is the key answer, and see whether we can work out this figure or not. Okay, now let's look at the question. So part B here, saying that the trial balance of the company as at 31st March 2002 did not agree, and the suspense account was debited with the difference. So that means whenever we do not have the same figure on debit side and credit side in the trial balance, and then we need the help of the suspense account, right? And here saying that's debited with the difference. So therefore, this is a suspense account. So we have the suspense account added on debit side. So obviously, what is the meaning of that? That means in the trial balance, okay, we always add on a smaller side, and now debit side is smaller, so debit side is smaller than the credit side. That means in the trial balance, we have a credit balance. So before we find out the mistake, we insert suspense account on the smaller side, and debit side is smaller, so that this is what we begin with in the suspense account, and the description is difference in the trial balance. However, since we are not given this figure, but it doesn't matter, so later on, after we have posted everything in the suspense account, and this figure will be the balancing figure. Okay, and next we also have this, the draft net profits given to us is this 67,246. So therefore, we have this figure for the net profit, the draft one, which is before adjustment. So we start with this 67,246 to begin with, and after we have finished all the correction of error, and see whether we can work out this adjusted net profit or not. Okay, so next we are going to do the analysis step by step. So number one, we are given this. A credit purchase of furniture for 5,000 had been recorded in the purchases daybook. So that what should be the correct entry when we purchase furniture? And furniture is a kind of non-current asset. So the double entry, the correct double entry, we should debit furniture. Okay, and then credit purchase means we pay no money yet, so that this is other payable. All right, and the amount is 5,000 and 5,000. Okay, so we do the analysis step by step. Okay, and what's wrong with that? Had been recorded in the purchases daybook. So what is purchases daybook for? This is a book for credit purchases. So therefore, the wrong entry done. This has been entered in the purchases daybook and treated as credit purchases. So the double entry will be debit purchases and credit trade payable. Okay, so this is 5,000 and also 5,000. Okay, so after you have put this side by side, so how should we correct the mistake? So that we have to cancel this. So how do we cancel credit purchases? The double entry will be just reverse the double entry, and then we should do the correct entry and add the correct entry as part of the answer. So the journal entries here, what we need to do is to cancel credit purchases by doing the opposite, so that we debit trade payable and credit purchases. But the point is purchases. Purchases should go to income statements, and since we already have the net profit being calculated, so that the mistake should be affected the net profit, so that I have to credit profit and loss account. And then which item affecting profit and loss account, and which is the purchases account being included in the income statement. And then I put this 5,000 and 5,000. So this double entry is to cancel credit purchases, and now I have to add the correct entry because this is purchases of furniture. So I debit furniture with 5,000 and credit the payable. This is a kind of current liability. Okay, and also since the firm has omitted this furniture, therefore what happened to depreciation? Okay, depreciation will be also omitted in the books, and this is a double entry saying that the company provides for depreciation at the rate of 25% on costs of furniture. So depreciation being omitted, and the double entry for depreciation will be debit depreciation in the profits and loss account, and this is depreciation omitted. Okay, and credits accumulated depreciation. Okay, and the calculation will be the costs is 5,000 and then times 25%. So therefore I have the figure for depreciation will be 5,000 times 0.25, and that is 1250, 1250. Okay, so that's all for the answer in point 1. Okay, so right after this double entry, so we need to look at the effects on the net profit. So here we credit profit and loss account. It is because of purchases being overstated. Now here is the analysis. So what's wrong if purchases overstated? The cost of goods sold will be too large. So too large, the cost of goods sold, then gross profit will be too small, then net profit will be too small. Is that right? If net profit will be too small, so what happened? We are going to add this 5,000 to net profit. So here in the statement, we need to add purchases overstated 5,000 to this net profit before adjustments. Okay, and also we have another effect here, debit profit and loss account because of depreciation understated. All right, depreciation omitted, understated. Depreciation is a kind of expense, so expenses too small, then net profit will be too large. And what happened to that? We need to deduct this from net profit. So here is the statements. We need to minus depreciation omitted from point number 1, 1,250 from the statement here. Okay, so simply speaking, we can skip this analysis directly just by looking at this. Credit profit and loss. And credit side in the profit and loss is positive, so you simply add to net profit. And here, debit profit and loss is a negative thing, so that you simply do minus in the statement to save you time. Okay, but anyway, you can see actually the analysis here, it matched with the debit and credit in the profit and loss accounts. Okay, so that's all about point number 1. And now we come to point number 2. And point number 2 is a very special adjustment. Okay, so this is very important about the adjustment for closing inventory. And now closing inventory being overstated. And here we analyze it step by step. Okay, so what happened to closing inventory? Overvalued. So closing inventory is too large. Okay, so what is the analysis? First, where do we put closing inventory? We put that in the income statement, and also this will be in the trading accounts. Not only that, we have closing inventory also in the balance sheets and statement of financial position. Okay, so what's wrong if closing inventory is too large? Then what happened to cost of goods sold? And then look at the formula of cost of goods sold, which is opening inventory plus purchases minus closing inventory. So what happens if we minus closing inventory, which is too large, then cost of goods sold will be too small, and then the gross profit will be too large, and then net profit will be overstated. Is that right? Okay, and now we come to closing inventory in the statement of financial position, which is a kind of current assets. So therefore, the current assets will be overstated due to closing inventory in the statement of financial position, also overstated. Therefore, what is the double entry to adjust this closing inventory being too large, so that you can see profit and loss too large? To decrease it, we go to the opposite side. So we debit profit and loss account. All right. And then this inventory is a this inventory, closing inventory, is a kind of debit item in the statement of financial position because it is part of current assets. Now it is too large. We need to decrease it. So we credit inventory in the statement of financial position. So therefore, this is the special analysis for closing inventory if it is too large. Okay, so therefore after the analysis, okay, we should put proper answer in part A here. So to debit profit and loss by 1,347 and then credit inventory also by this 1,347. And look at this, debit profit and loss, which is negative in the profit and loss. Therefore, we have to minus this 1,347 in part C here and saying that this is the description, closing inventory being overvalued, and this is from point number 2. Okay, now number 3 here, we have 3 samples received from the supplier have been wrongly recorded as credit purchases. Okay, so let's do analysis again. Here we have the diagram. So what should be the double entry for 3 samples received from supplier? Before we look at that, we make comparison. So what should be the double entry when we have goods received from supplier? That means we debit purchases, right? Okay, and then we owe money to supplier, so that would be credit trade payable. Okay, so this is the usual double entry and our relationship between supplier and saying that we always purchase goods from supplier, right? But however, 3 samples received from supplier, that means since we are not going to sell these 3 samples to a customer, we don't treat these 3 samples as part of the goods, so that we don't do purchases, we don't debit purchases. So we do nothing here because samples will not be treated as the inventory in the business, right? And since this is 3, that means we owe nothing to supplier and then we do nothing. So what should be the treatment for 3 samples received from supplier? We do nothing. We should not do any double entry. Okay, so that is the correct thing we have to do. However, let's look at the wrong things done here. Had been wrongly recorded as credit purchases. So since we should not do anything, no double entry, so what we need to do is just to cancel the wrong double entry done. Okay, and the firm has wrongly debited purchases, right? And credit to trade payable accounts. All right, so what should be the proper double entry for this? Point number 3, what we need to do is to reverse the credit purchases being done. So that reverse this, so debit trade payable and credit purchases. So my answer in part A will be debit trade payable. Okay, so how much is that? 1,000? Because it should not be, we don't owe any liability to supplier because this is 3 sample. And then profit and loss because of purchases, we need to cancel that. Okay, so this is the answer to correct the mistake. Therefore here, credit profit and loss, which is positive in the profit and loss, so we add this 3 sample received it. Okay, so this is related to point number 3. Okay, and that is 1,000. Okay. Okay, next we have point number 4 saying that a partial loan repayment. So what is meaning of this? Loan is a kind of liability. Now we have repayment for loan by paying money to settle the loan. Therefore, what happened? We have less loan. Okay, so we debit loan, we have less liability. Repayment, why we have less liability? Because we pay money to settle the loan, and the correct amount is 6,000 and 6,000. Again, we do it step by step. Okay, so this is the correct entry we have to do. Oh, what's wrong? Here, the wrong thing. It had been recorded correctly in the cash book. It was recorded as 600 in the loan interest account. So I just copy that. Had been correctly recorded in the cash book. So there is no mistake in the cash book. So no mistake in the bank account. So 6,000. And this is correct. However, what's wrong? It was recorded as 600 in loan interest account. That means the firm has debit loan interest account by how much? By 600. Okay, and this is wrong. Okay, so right after that, we can get our answer to correct the mistake. Let's see what things we have to cancel. Cancel loan interest. How to cancel that? Okay, go to the credit side, the opposite side. Loan interest, interest, 600, right? And no mistake in the bank account, so we don't need to worry about that. And we need to debit loan, however, not debited. So this debit loan being omitted, 6,000. Okay, and that's all. And then you check 6,000 on debit side, 6,000 on debit side, 600 on credit side. So, all right. So what do we credit? We credit suspense account. Why? Because if you look at the wrong things done here, 600 on debit side and 6,000 on credit side. So you can see this mistake actually affecting the agreement in the trial balance. All right, so therefore we need to credit suspense account added on the smaller side. Okay, so that will be how much? 6,000 minus 600. Okay, so you don't need to worry about the suspense account. You just insert suspense account on any side which is smaller than the other side. So here, credit side is smaller, so we insert suspense on the credit side. Okay, so therefore after analysis, we need to write answer properly in part A here. Debit loan, because after repayments, we have less loan, we debit 6,000. And the loan interest is the one of the expenses item in the profit and loss account, so we credit profit and loss, okay, by 600 and insert suspense on smaller side, 5,400. So therefore, credit profit and loss is positive. We need to add back this 600 and saying that loan interest overstated. And also, credit suspense account by 5,400, and here we credit 5,400 in the suspense account because of loan, and this is from point number 4. Okay, next we come to point number 5, and this one is also a very special point, and then we have this sales day book was overcast. So to study this, we need to look at the diagram for credit sales, because what is sales day book? Sales day book is a book for credit sales. Now here is the diagram. Flow of credit sales means after making sales to the customer, we have no money received yet from customer, but we still need to do communication, and then we send the sales invoice to the customer to remind them how much they owe money to us and when should they pay us money. So that what is sales invoice, which is a source document for credit sales. And right after step number 1, okay, we will record this sales invoice in the book. And there are 3 names for the book: sales journal, same as sales day book, same as sales book. But anyway, what is it? It is a book for credit sales. Okay, now this is example. For example, in this book for credit sales, sales journal or sales day book, we have 3 columns inside that for the dates, and the big column for details, and then we have amount here. And then we have Rachel, Kelly, and Rachel again. Actually, who are they? They are customers, and then they don't pay money to us yet. They are also debtors. Okay, so right after this sales journal or sales daybook, now we come to double entry. So what should be the double entry for 3A here? Okay, so therefore let me add up the total here. So 200, 500, and 400. Okay, so the correct answer should be 1,100. However, I make a mistake here and I write 1,200, so which is wrong. Actually, the correct answer is 1,100. Okay, so let's look at the effect. If we have the total in the sales daybook, which is overstated, let's look at the effect here. Now we come to the double entry. 3A, we have sales ledger, and sales ledger means customer's personal account, so that we draw up different T for each customer. So we have Rachel, therefore I copy this 200 here, Rachel, right? And then I have Rachel again here, this is Rachel, 400. All right, so this is how we do double entry after we have made transactions, the information in the daybook. All right, and then I have another account for Kelly. So Kelly is 500, so that I have this in Kelly's account. So that's why we call it sales ledger, means personal accounts for each of them. Okay, so this is debit side. What about credit side? Credit side, we draw up sales account. All right, since we just draw up one account in sales account, therefore, okay, which is the total 1,200 here in the sales account. So this is the mistake. If I have over added, right, in the sales daybook, what will be the effects on sales account? All right, now point number 4. So step 4 or point number 4. So let's look at the effects in the trial balance. And in the trial balance, I have debit column, credit column, dollar sign, dollar sign. All right, and now look at trade receivable. Okay, so for trade receivable, I refer to step 3A here. So I just add up 200, 400, and 500. See, I have 1,100 in trade receivable account. And what about sales? This is step 4. I refer to the previous steps. I have 1,200, right? Okay, so let's look at the effects of the mistake. If I have over added the total here, then no mistake in trade receivable account. However, sales is wrong. Okay, so how should I correct the mistake? By using the double entry. So here is the final adjustments. So sales account too large, it should not be 1,200, it should be 1,010. So how to decrease sales? Go to the opposite side. Okay, decrease sales by 100, and then that's all. No mistake in trade receivable accounts, so the answer will be suspense. Okay, so this is it for the answer for the adjustments. If we have this sales daybook overcasts, right, we need suspense account. So that it is very important. You need to study the flow and the diagram for credit sales. Okay, so after the analysis, don't forget to write proper answer in part A here. So sales affecting profit and loss, so that we debit profit and loss account by 100 and then credit suspense, right? And debit profit and loss, which is negative. So therefore, here is my statement. I minus this 1870. Okay, in the statement here, the description is sales daybook overcasts because of point number 5. Also credit suspense. And then now let me show you the suspense account. So where is my suspense account? My suspense account is here. Okay, so in the suspense account, I credit 100 because of sales, and this is point number 5. Okay, so next we have this discount allowed that have been debited to sales account by this 640. All right, so what should be the correct double entry for discount allowed? So we have discount allowed, which is a kind of expense, and then we allow that to trade receivable, which is our debtor, if you want them to pay us earlier, and that is 460, 460, right? Okay, so what's wrong? Had been debited to the sales account. So I just follow that. Had been debited to sales account by 640, and this is wrong. Okay, and the question mentioned about trade receivable, then we assume that there is no mistake in trade receivable account, so 460. All right, so this is the rule. Okay, remember the rule saying that if the question mentioned about nothing, okay, related to another account, that means we have no mistake in that accounts. All right, okay, so how do we do correction of the mistake? What things we have to cancel? We need to cancel sales. So to cancel sales, we go to opposite side, we credit sales with 640, right? And then we need to add discount allowed on the debit side, 460. Okay, now you can see this error affecting or not affecting agreement. Yes, so a 640 on debit side, but another figure on credit side. Therefore, we need suspense account. Always insert suspense account on a smaller side. All right, so therefore that will be 640 minus 460. So I have 180. All right, so this is the analysis. Okay, and don't forget, when we post it to part A, always write nice answer here. Discount allowed in the profit and loss account because of discounts allowed. The marks will be deducted if we use abbreviation. 460, and then credit also profit and loss because of sales by 640, and then insert on smaller side with suspense account 180. All right, so here debit suspense 180. Therefore, I have my suspense account 180. So write the correct one, the correct account, which is discount allowed from point number 6. Okay, and what about in the profit and loss? So we can use the net figure. So which side is bigger in profit and loss? Credit side is bigger. So 640 minus 460. Okay, 180. Credit means positive. So therefore, I go to my net profit. I add the difference 180, and then you can simply describe point number 6 as discount allowed. Okay, wrongly debited to the sales account. Okay, no abbreviation. Remember that. No abbreviation, otherwise marks will be deducted to sales account. And I have my point number 6 here. Yes, this is point number 6. Okay, and yes, that's point number 6. Okay, so next, number 7. An increase in provision for doubtful debts. Now, this is the old name. The updated name in DSC is allowance for doubtful debts. Have been treated as a bad debts. Okay, so again, step by step, what should be the correct entry? So here is correct entry for allowance, increase in allowance for doubtful debts. So we debit profit and loss and credit allowance for doubtful debts. However, wrongly treated as bad debt written off, we have debit bad debts and credit trade receivable. Okay, so this is wrong, this is wrong. So how do we cancel this? To cancel bad debt written off, the double entry should be reversed. So we credit bad debts by 900 to reverse that trade receivable, right? And then we add the things we have to add. So the same side, debit profit and loss and credit allowance for doubtful debt. So this is 900 and this is also 900.